Okay, let's say for example now this is pounds US dollar structure. Are you guessing it? You don't even need to look overall. Are you guessing it? Let's say this is a structure and you are seeing pounds trending to the upside like this. Okay, so let's say probably this was the last, let me be fast, this was the last higher high we had on that higher low. We have gotten on that higher high. You have to do on that higher low. And the next one is two on that higher high here. And you used to do on that higher low. So all you are waiting for, if you start coming down, you're waiting for it to come down. Then do on that higher high. Do on that higher low. Higher high. Higher low. Higher high. These are simple as this. Your own is waiting for, you don't have to enter buy from here. You don't even have to enter sell also. Your own is, don't trade against the market. Let it do higher low, higher high, higher low, higher high, higher low, higher high. It's as simple as that. Trust me, it's as simple as that. If it's going to change to the downside internally, let me show you something. Internally, you start seeing those switch to the downside. That's if you want to scalp it down, or it's rubbish. Are you getting it? And when a market is doing higher highs and higher lows, let me show you something again. Let me delete this off. When the market is doing higher highs and higher lows, what do you look out for? See, any market that is going to the upside, you will see that is the retracements are very sluggish. Do you know how many times from Wednesday, May 9, 17, sluggish for a very long time or before he found a double bottom, before he found a support. So a lot of people don't even look at structures, they just look for where it's going to come to, then take on that trade again. They don't even look at the values, they just enter blindly, put their stop loss under here, because they know that if this is a higher low, are you getting it? It's going to come and do a higher high. So some people take their profit from there. Are you getting it? Some people wait till it gets to the main target because they know it will get there. Then after getting there, it does a what? A Fibonacci retracement again from here. Look at it did a 0.5 Fibonacci retracement level again. Are you getting it? Then it's going to do on that higher high again. And for it to do on that Fibonacci retracement level, so I have two values we take profit from at Vision X. What are the two values? Hold on, let me show you. Let's take this one off. Then we just come and bring your Fibonacci trend extension again from here to here to here. How many places does it we take profit from? 0.618 and 0.786. So anywhere it gets to, I take profit from here and wait again for it to do on the higher low again. Are you getting it? If you can even just measure this one and bring it here, it's gonna get there. Then you take on that one again to the upside. It's as simple as that. It might take days, a week or 2, 3 weeks. Your own does not concern you. Your own is that, what do you want to do? You want to buy, okay, let's bring on Fibonacci now in now. Let's say it gets to this extent. Are you getting it? Where are you expecting it to come to again? 0.5 or 0.618. Which area? These two areas. 0.5 or 0.618. It goes up to this place, come back down here, aligning with your previous higher high. You buy again, put your stop loss under here and wait for it to extend again. This is from 2800 to 3100, 400 pips again, a bit 300 pips, a bit 400 pips again. You put one lot to it, $3,000, $3,000, $3,000. You would have been making money on this fight. It's as simple as that. So your higher time frame structures trend properly more than your lower time frame structures. Are you getting it? Because lower time frame structures are for scalpers. It's as simple as that. Trading is not hard. It's even accurate. It's accurate for you. It's just maybe because at Vision X here we like looking at our what's it called? We don't just like trading support and resistance or higher highs and higher lows. We like trading market structure entirely to find out whatever is happening entirely. As you can see now, see, look at the daily now. You see what the daily is doing? See, higher high, higher low, another higher high again, higher low, higher high. So I prefer to trade the higher time frame structures because if this is, let me first use the Fibonacci retracement level. From here to here, what did it do? How many pairs? 0.0. It's not even gotten to 0.382. For you not to even get to 0.382 and switch to the upside here, I'm using, it must get to 0.786 if I use my Fibonacci trend extension. Look at, from here to here, it must get to 0.786. Look at, it still even have about 1.3438. See where it's coming to. 1.3438. Are you getting it? And it's still 2,900 till now. So assuming you knew, you would have entered from here. And even it takes 2 months, you know you have 300, 300 to 400 is 1,100 pips. Enter. Daily time frame entry now. Take it to here. Put your stop loss, maybe 200 pips. Take under 1,200 pips. So the market don't lie. The market is trending perfectly well. This is the footprints they leave for you. It's you that is not just understanding what is happening entirely all the time. You are looking at the lower time frame. You don't know how to trend this. So the market will definitely come here. 1.34, that's pounds now, 1.3438. So look at your higher time frame. The lower time frames will internally work it out for you. The lower time frames, probably the hourly time frames, will internally work it out from you how to get to that extent before doing a retracement again to the downside. So let's say this is our last low. Are you getting now? This is our last low. So if it gets there, if it's still going to go up, it will trend back to the downside to 0.5. And where is the 0.5, 0.618? It will come back to this area again. So don't look at, say, oh, why is it falling? Why is it falling? No, it's supposed to come back here and fall back to 0.5 before you enter again. Put your stop loss below to start the continuation to the upside. It's as simple as that. Trading is not hard. This is just for you to wait for it to come back, go up, wait for it to come back and go up. That's trading. As simple as that. God. Trading is not hard though. God, trading is not hard. Trust me. It's very, very simple. It's just for you to know your exact values. But you need a trending market. And the market that trends the most are the dollar pairs. Your gold, Euro USD, AED USD. This, even the pounds is perfect, gold is perfect, Euro USD is perfect, very perfect for you. So it's just for you to know your values, because this is the last supply we have on the daily. Look at it. The market is trending back to this area, this last supply. So until it gets to that supply, it will not rest until it finds a major daily supply to 300-400 area that I just did just now, before it might come back to come and test our structure again. If it holds, we take on that one again to the upside. It's as simple as that. I think this is not going to go on Telegram. Let me put it on the YouTube and send to you guys to watch. It's as simple as that, bro. This is pounds for you. So why, if you are holding a trade from here, why can't you hold a 1,000 pips to the upside? Why coming to start taking 20 pips every day? Well, you know that if you put a one lot on this account, maybe you have a $1,000 account. Okay, let's say like you want to raise the full $1,000 and use a 200 pip stop loss from 234. Let me say 300, and use a 300 pip stop loss to 1.200. Are you getting to make 1,000 pips? That's 1 to 5 risk to reward ratio. If you bring your distance in, it's a 1 to 5 risk to reward ratio. So you can even raise $300 out of your $1,000, use a one lot, enter. 2 months time or 3 months time, you make $10,000 with your $1,000. It's as simple as that. That's investment for you. So instead of you now now you're on the 1 hourly time frame right now, you now said, okay, and let me see how the market is trending. You don't have to go to the lower time frames again, because you entered the 1 hourly structure, a daily structure time frame. Don't go to the 4 hourly, because the 4 hourly and the lower time frames will deceive you. See the 4 hourly now. The 4 hourly is making a lot of noise. That's when you now start seeing all this small. Then imagine you now go to maybe the 30 minutes time frame. You now start seeing internal structures. Can you see now that even on the 30 minutes time frame, it has been trending for you higher, low, higher lows, higher high, higher lows, higher high, higher lows. That's how it goes for you. So it's either you are taking these lower time frame structures, are you getting it, or you are taking the higher time frame structures, knowing what is happening on your daily structures already. Are you getting it? You know that you know where your daily and your weekly structure is traveling to already. So you come to lower time frame structures to take those lower time frame trades if you want to do trade it out. Are you getting it? Because if you come to the probably the 1 hourly structure right now, you can start saying that, okay, look at, let me use my brush. This is Friday, let me just say Friday, Monday. Okay, this is Monday 29th of May. You took profit 1st of June. That's 3 days. You waited till 5th of June again. You enter the buy. Before you can take it a 12th of June, 7 days later, you entered again 12th of June, that same day. You took profit again 16th of June, 4 days later. So this is just you connecting the dots. Are you getting it? Till you get to your daily time frame, take profit of 1.3400. So it's as simple as that. It's just for you to know how your market has been trending. Then if you don't have patience of waiting for months, go to lower time frames and just start trending it out the way it's happening. That's why they say find your direction first on your higher time frames, then go to your lower time frames and start trending it out. If not, this market has been trending perfectly well. If I'm a GU trader, as easy as that. Take care and bye for now. Bye bye.